Hey there, folks. Happy Friday to you. Hope you survived the day and hope you had a good week trading. You know, for the last 3 weeks, I have had the caution flag up, concerns about some of the things we were seeing technically, and concerned about binary events like last night's vote uh, from Britain. And listen, it's almost unbelievable how we could be so far off and get something so wrong. The polling numbers clearly were favorable from Monday up through, Thursday. 3 days out of the week, we had basically some gap up days and then just consolidation. But everything was looking as though we had nothing to worry about. And then, boom, we get blindsided with the Brexit vote. And, look, I don't think anyone really knows what the long term ramifications will be of this vote. Um, and there is definitely going to be some volatility in the markets as things develop. You're going to have central banks throwing everything they can at this to alleviate some of the fear and concern that may start to develop. And who knows whether that will be effective or not? Who knows if that will make things better or worse? So, we have to assume that there's going to be a lot more volatility in the markets. And I'm raising the caution flag from orange to red with a short bias. Not to say that we can't get some powerful snapbacks. That is absolutely possible. I just think there are too many unknowns out there. I think we've been in the midst of an earnings recession, and we also, it seems as though the economy is slowing down a little bit. Jobless claims ticked up. I mean, we had an okay jobless claim report this week, but I just think there are some red flags. Look, we haven't had a really serious correction in the market for over, we're going on 8 years. So I'm not trying to be a doom and gloom guy. I'm not trying to be a fear monger at all. I think we're going to have some great short term trading opportunities. I think that if we do get a real severe pullback, that would be healthy for the markets. I think it resets the clock, and I think it gives us opportunities to buy good companies on sale, right? Because I am not just about day trading, I'm also about swing trading and long term investing. And, this is when you're a long-term investor, these are the kind, you want to see significant pullbacks, right? You want to find things that you can when you can buy them on sale because they're being thrown out with everything else. So let's take a look at what the markets did technically and see if we can kind of figure out where we might find some support in the near term, where we may be able to see a bounce. But Nasdaq closed nearly at the low of the day, almost at this area of support. 4,700 is kind of looking like the area, right? If we break below 4,700, likely come down and test in this 4,600 range. And if then we lose that, well, oops. Let's take a look at where we can find some other support here. Maybe around 4,500, 4,486 or so, right? And then if that breaks down, maybe we come back down and look to test these February lows. So, not real positive action in the NASDAQ. Let's take a look at the IBB, which is really, really close to taking out a very key level here. So IBB closed nearly at the low of the day. Maybe we've got a little double top going on here, right? And the big concern here with the IBB, let's back this out to the weekly, as we close actually, you know what? All right, well, no, I'll just stick on this. Now, let me go to a different screen. I'm going to go to a different screen, clean it up a little bit. So let's go to the weekly. So here's the big concern. We closed below the 200-week moving average, and we're flirting with this long-term trend line. So if we break below this with conviction, I think we're coming down potentially to test somewhere around the 200 range, maybe 207 in that area. We find a little bit of support, bounce, and then continue lower. I don't know. I think at that point, if we get down into this 200 range, you're going to have some steal of deals in the biotech sector. Gilead is one that I've been watching. Almost wanted to jump on it last week. Glad I didn't. I wanted to get past Brexit, but it is one that I continue to watch for a potential opportunity. And look, when fear comes into the marketplace, you can pick things up at ridiculously cheap prices. It happens. But you have to be very careful because ridiculously cheap can get ridiculously cheaper. So just keep that in mind. You look for areas of potential support, but don't think that just because you have this area of support, that's going to be the one where you get a complete reversal. It could be an area of support for a short period of time and then continue its move lower. So just keep that in mind. IWM, let's take a look at the IWM. We go back to the daily. So, you know, we broke below this trend line fairly convincingly on massive volume. Look, it was a huge volume day. Plus, we had a Russell rebalancing, which added to that volume, added to the volatility. To think that this is a one-day event after that kind of an event, I think would be fairly foolish, right? So, not to say that we can't have some bounces, but I think that the trend for the near future is going to be lower as we work our way through what's happening around the globe. So IWM, you know, I think maybe we could potentially find some support here at 1016, 1020, right? 200-day moving average may find some support there. If we break below, that's basically about 11 bucks, 1085. We break below there, maybe we come down and test somewhere around 107, I think. Yeah, 107. And if we break below 107, I think we come down and test 103. So caution, caution, caution is where I'm at. Let's take a look at a couple of specific sectors. Transportation, which got absolutely murdered today. Priceline.com got destroyed. And, you know, look, we had some concerns about transportation last week, right? It can be the sector that leads the markets lower and did not close well. Closed nearly at the low of the day. Look for it to test 42 even, you know, 41.90. If we lose that, come down and potentially test 40.50 in that range. XRT retail testing this trend line, did pierce below it, managed to close right on top of it. But XRT not looking real strong. Oil and oil production. So energy took a little bit of a hit today. And this all had to do really with the dollar, right? Dollar had a big pop. Let's take a look at the dollar real quick, right? Big pop. If this dollar strength continues, you could look for that to put some more pressure on oil and energy names. So we need to be cautious there. The other thing that we need to pay real close attention to is volatility. Big spike in volatility, and I would look for that to continue, right? Doesn't mean we can't get a little bit of a pull. I do have TVIX. I'm holding a quarter of a position through the weekend in anticipation that the volatility will continue. I'm looking, you know, the way I'm viewing it is we're going to have a weekend full of, you know, fearful headlines. The average Joe that had no idea what was even going on with Brexit is going to read about it this weekend. They're going to see their 401k. You know, maybe we get a continuation of the fear and it even picks up a bit. So keep an eye on volatility. It is something that you absolutely may have some trading opportunities in. Home builders pull back to an area of support. We've got a lot of charts, indexes, sectors that are pulling back to potential areas of support. And if we break down, you know, it could be significant. Look, we've been in an upward trend. Let's put it this way. We haven't had a really significant pullback in over, we're going on 8 years now. The market has been consolidating sideways for a couple of years. We really haven't gone anywhere for a couple of years. We haven't had a 20% pullback in the markets in almost 8 years. So with everything that's going on out there, is that a possibility? It absolutely is, and it's something that you need to be cognizant of, right? We need to have our minds open to that possibility. So home builders pulling back. Let's take a look at one area that could be an area of strength is utilities, right? People looking for yield, looking for a place to park some cash. That could be utilities. Gold and silver, very interesting, right? Silver particularly kind of caught my eye because $17 seems like a very big spot for silver. If it can take out 17 with conviction, I think you can get a pretty nice run in silver. Now let's back this out to the weekly real quick. I mean, look at where this thing's at, right? So if it could take out 17, I think you've got a potential run up to 18 or so, 1820, where you come into some long-term potential resistance. That's not a huge move, but still, I think it's worth keeping an eye on silver. The miners are, if gold and silver continue to move higher, the miners are going to continue to do well. GDX, I'm sorry, GDXJ, right? All hit highs today and wound up pulling back. JNUG. I think you're going to continue to see volatility in this sector. I just don't think that people believe in paper currencies, right? I mean they don't believe in currencies anymore, and they don't believe in central banks anymore. So just be really pay close attention to the miners. I think there's still going to be some upside potential there. S&P 500, closed below 204, which was kind of like a line in the sand. Really, the big line in the sand is at the 200-day moving average, 2020. Could we find, could we bounce off of there? Absolutely. But I think eventually we take out 2020 and we head lower. And we need to be prepared for that. Let's take a look at SMH, the semiconductors. 58 was an area that we felt could be resistance. It pierced up through 58, came up into 50-50 basically, and now it's acted as resistance one more time. We've broken below 55, or actually this first area of price support right here, 55.66 in that area. Now we're looking for potential support somewhere around 55. If it breaks below 55, likely come and test this trend line. We break below there, we come test the 200-day moving average. So oil pulling back. Right, priced in dollar terms. So If the dollar continues to rise in strength, you're likely going to see some pressure there. So be careful in that space. Financials whacked, right? Uh, Closed nearly at the low of the day, at an area of potential price support. If we break below 22, things could get fairly ugly in the financials. Industrials also took a hit, right? Why? Because of the rising dollar. If the dollar continues to strengthen, that's going to put some pressure on the industrial, the multinational companies. So you got to be a bit careful with the industrials. Even aerospace and defense took a bit of a hit today, which has been a really strong sector. Let's take a look at what is that? Aerospace and defense. Now, look, I do think that aerospace and defense long term is always a good place to park some cash. Uh, but that was a pretty big hit in aerospace and defense. You know, could Lockheed Martin pull back into this 227 range? Absolutely. I think that is possible. So worth keeping an eye on aerospace and defense for potential opportunity to get involved. This is more for a long-term hold or swing type position. If you know, look, if we continue to have significant volatility in the gold and the miner space, dust and J dust could present decent day trading opportunities. Those are not things that I would hold overnight, but they could present some nice day trading opportunities. Cyber, you know, look, there really weren't any sectors that didn't get whacked today. Okay, so, but I will say this. The market actually held up better than I thought it was going to. So, you know, we did come down to some areas of potential support. They're holding for now. You know, let's see what happens after this weekend when people have time to absorb all of this stuff. See if these areas of support hold or if they break down and we really start to see some fear come into play next week. So, you know, I'm not going to go through everything. I mean, everybody's got a pretty clear picture, I think, of what's going on out there. This is absolutely a time to be cautious. It's also a tremendous time to start building your long-term investment portfolio watch list, right? If you've done what I did, which was raise cash over the last several weeks, then you're in a position where you can start looking for opportunities. And what you want to do, or what I do, is I go through and I look for ridiculously low prices where there is potential support in stocks that I really want to own, right? Ridiculously low prices. I mean, I'm looking for areas of support that right now seem like there's no way they could get there, you know, setting alerts because you just never know, right? When fear really takes hold, things go on sale. That's how it works. You just have to have the patience to wait for them to get there. So I will be doing stocks to watch, Ticker TV live on Sunday morning, 8 a.m. Vegas time. Hopefully we have some stocks to take a look at from either long side or short side. So if you have any stocks that are on your radar that you'd like to ask about, email them to me, tweet them to me, and I will do my best to get them on the list. Okay, enjoy the rest of your weekend. Don't let this ruin your weekend. You know, if you're in the markets, don't get all freaked out. You know, I hope a lot of people didn't panic and sell today. You know, you never want to sell in a panic. So don't let this bum you out. It's you know, it's just a moment in time. At some point, we will work through all of this, but enjoy your weekend. Enjoy the things that are important, right? And the stock market is fun, but it's not the most important thing in your life. So, all right, enjoy the rest of your weekend. I hope to see some of you on Sunday. For those that can't make it, I'll see you all next week.